Understanding Banking, Importance and Functions. Welcome, everyone, to our training session on Understanding Banking, Importance and Functions. Today, we're going to delve into the fascinating world of banking, exploring why banks are crucial for individuals, businesses, and the economy as a whole. So, let's jump right in. Introduction to Banking. Part A. Definition of banking. Imagine a world without banks. No place to save your hard-earned money, no source of funding for your dreams, and no mechanism to facilitate financial transactions. That's the void that banks fill. In its essence, banking refers to the business of providing financial services, such as accepting deposits, lending money, and facilitating payments. Part B. Historical evolution of banking. Let's take a brief journey back in time to understand how banking evolved. From the early days of bartering to the establishment of ancient financial institutions like temples and grain banks, banking has undergone a remarkable transformation. Fast forward to modern times, and we witness the emergence of sophisticated banking systems, powered by technology and globalization. Part C. Overview of modern banking systems. Today, banks come in various shapes and sizes, ranging from traditional brick-and-mortar institutions to online-only banks and fintech startups. These institutions form the backbone of our financial infrastructure, playing a vital role in driving economic activity and facilitating financial transactions on a global scale. Importance of banks. Part A. Facilitating economic growth. Consider this. Without access to capital, businesses cannot expand, innovate, or create jobs. Banks play a pivotal role in capital formation by channeling savings into productive investments. For instance, when a bank extends a loan to a budding entrepreneur to start a small business, it's not just financing a venture. It's fueling economic growth and creating opportunities for prosperity. Part B. Providing financial services to individuals. Think about the financial services you rely on in your daily life. From savings accounts that help you build a financial safety net to mortgages that enable you to achieve the dream of homeownership, banks offer a wide array of products and services tailored to meet the diverse needs of individuals. For example, let's say you're planning to buy your first home. Without access to a mortgage loan from a bank, purchasing a property might remain just a distant dream. Part C. Ensuring financial stability. In times of economic uncertainty, the stability of the banking system becomes paramount. Banks play a crucial role in spreading risk through diversification of their loan portfolios and investments. Additionally, central banks, the guardians of monetary policy, rely on commercial banks to implement policy measures aimed at maintaining price stability and promoting sustainable economic growth. Part D. Fostering trust and confidence in the economy. Trust is the bedrock of any financial system. Banks serve as custodians of public trust, safeguarding deposits, and providing assurance that funds will be available when needed. By upholding high standards of transparency, integrity, and reliability, banks contribute to the overall confidence in the economy, which is essential for attracting investments and fostering economic development. Functions of banks. Part A. Accepting deposits. Let's talk about the fundamental function of banks, accepting deposits. Whether it's a checking account for your day-to-day transactions, a savings account for your rainy day fund, or a fixed deposit for long-term savings goals, banks offer a range of deposit products to meet your needs. Take, for example, a savings account. By depositing your money in a savings account, you not only earn interest on your balance but also enjoy the peace of mind that comes with knowing your funds are safe and accessible whenever you need them. Part B. Providing loans and credit. Now, let's shift our focus to lending, the lifeblood of banking. Whether you're a homeowner in need of a mortgage, a student pursuing higher education, or a small business owner seeking working capital, banks offer a variety of loan products to help you achieve your goals. Consider this scenario. You're a small business owner looking to expand your operations. By securing a business loan from a bank, you can invest in new equipment, hire additional staff, and seize growth opportunities that would have otherwise been out of reach. Part C. Payment services. In today's digital age, the way we conduct financial transactions has undergone a revolution. Banks play a central role in facilitating payments, whether it's issuing checks, processing electronic funds transfers, or providing credit and debit card services. For instance, imagine you're traveling abroad and need to make a purchase. Thanks to your bank-issued debit card, you can seamlessly conduct transactions in foreign currencies without the hassle of carrying cash or worrying about exchange rates. Part D. Investment banking services. Beyond traditional banking activities, banks also offer investment banking services tailored to the needs of corporations, institutional investors, and high-net-worth individuals. From underwriting securities offerings to providing merger and acquisition advisory services, investment banks play a critical role in facilitating capital markets transactions and corporate finance activities. Let's say a company decides to go public by issuing shares to the public for the first time. An investment bank may step in to underwrite the offering, helping the company raise capital and access the stock market. Part E: Foreign Exchange Services. In an increasingly interconnected world, businesses and individuals engage in cross-border transactions on a regular basis. Banks provide foreign exchange services to facilitate currency exchange, international money transfers, and hedging against currency risks. Consider this scenario. You're a business owner importing goods from overseas. By using foreign exchange services offered by your bank, you can efficiently convert your local currency into foreign currencies to settle payments with your suppliers and manage currency fluctuations effectively. The role of central banks. Part A: Definition and functions of central banks. Central banks are the backbone of the financial system, responsible for formulating and implementing monetary policy, regulating financial institutions, and maintaining financial stability. Let's unpack this further. Central banks, such as the Federal Reserve in the United States or the European Central Bank in the Eurozone, have a unique mandate to control the money supply, regulate interest rates, and oversee the banking system. Part B: Importance of central banks in monetary policy. Monetary policy refers to the actions taken by central banks to manage the money supply and achieve macroeconomic objectives, such as price stability, full employment, and economic growth. Through tools like open market operations, discount rate adjustments, and reserve requirements, central banks influence the cost and availability of credit in the economy, thereby shaping aggregate demand and inflationary pressures. Part C: Relationship between commercial banks and central banks. Commercial banks rely on central banks for a variety of functions, including access to liquidity, regulatory guidance, and monetary policy signals. For example, during periods of financial distress, commercial banks may turn to the central bank for emergency funding through facilities like the discount window. Additionally, central banks serve as the primary regulator and supervisor of commercial banks, ensuring compliance with prudential regulations and safeguarding financial stability. Regulatory framework for banks. Part A: Overview of banking regulations. Regulations are the guardrails that ensure the safety, soundness, and integrity of the banking system. From capital adequacy requirements to consumer protection laws, banks operate within a complex regulatory framework designed to mitigate risks, protect depositors, and maintain market confidence. Part B: Importance of regulatory compliance. Compliance with banking regulations is not just a legal requirement. It's a fundamental principle that underpins the trust and credibility of the financial system. Banks must adhere to strict regulatory standards governing capital adequacy, liquidity management, risk management, and financial reporting to safeguard the interests of depositors, investors, and the broader economy. Part C: Role of regulatory bodies. Regulatory bodies, such as banking regulators, central banks, and government agencies, play a crucial role in overseeing and supervising the banking industry. These institutions set and enforce rules and regulations, conduct examinations and audits, and take enforcement actions when necessary to ensure compliance with applicable laws and regulations. Conclusion. In conclusion, banking is not just a business. It's a cornerstone of our modern economy, enabling individuals, businesses, and governments to manage their finances, access capital, and facilitate economic transactions. From accepting deposits and providing loans to offering payment services and investment banking solutions, banks serve as the backbone of our financial infrastructure, driving economic growth and fostering prosperity. As we look to the future, the role of banks will continue to evolve in response to technological advancements, regulatory changes, and shifting customer expectations. However, one thing remains constant: the importance of banks in shaping the economic landscape and supporting the financial well-being of individuals and communities around the world. Thank you for participating in this training session. We hope you've gained valuable insights into the importance and functions of banks. Remember, whether you're depositing your paycheck, applying for a loan, or making an investment, banks are here to help you achieve your financial goals and aspirations. Together, let's build a brighter and more prosperous future.